Today, I have a very special guest for you guys. I have Travis from Real Estate Mindset. We are going to be talking about the U.S. mortgage market because Travis is not only a YouTuber, a real estate agent, but he is also a mortgage lender. Travis, thank you for being here with me today. How are you doing, man?
Michael, first of all, I am doing fantastic. It is an absolute honor to watch you. As you know, I made a top 10 YouTuber list on my channel. You made the cut. I absolutely love your content, brother. And I really love how you started your YouTube journey as a realtor's realtor. Top 5 places, top 10 places. And what I really love, Michael, is you had the ability to adapt and change, and you actually switch the content on your channel, and essentially you're warning people on what is happening right now in the housing market. So I absolutely love that you're able to do that, man. So I'm happy to be here, brother. Thank you for having me on.
Yeah, absolutely. I appreciate you being here. Let's make today's video absolutely bonkers.
You know it's going to be absolutely bonkers, brother. You know that.
Absolutely. So yeah, I mean, you, Travis, you have been in the mortgage business for a long time. We see mortgage lenders are starting to go broke now. That's the title of this video. You know, how many mortgage lenders out there are folding up and closing their doors. What are you seeing going on with this as an insider? Because I am not in the lending business. I am a real estate agent, but I do not do loans. So you're the perfect person to talk to on this.
Well, that's a lot of pressure on my shoulders, brother. But you know, I'm gonna try, man. So I'm starting to see some changes, and I'll get into that. But really, what I want to say is it's a little too soon. It's a little too soon because if you think about it, we're about 3 months out of the complete crash of demand. And also, you also have to remember that if lenders like the lender I work for, AMCAP Home Loans, we're fine. We're able to absorb this, but we're predominantly a purchase loan business. So I think it's a little bit too soon to tell the severity of the mortgage market. But what I can tell you, Michael, is for sure it's been hit, right? And personally, I think we're starting to see the beginning signs of a crisis in the mortgage industry. And what I have started seeing right now is there are big, what's called non-QM lenders that are actually filing for bankruptcy. They're going out of business already. And non-QM loans are basically anything that doesn't fall under the Dodd-Frank Wall Street Reform Act, right? Which is FHA, VA, conventional, 30-year fixed, no adjustable, no prepayment penalty, things like that. And what QM loans do is it protects the lender in the event a borrower goes into foreclosure, they can't be sued, right? So anything that's non-QM, the actual buyer has an ability technically to sue the lender in an event of foreclosure. So non-QM lenders, which are your bank statement verification programs, right, which are foreign national programs, ITIN numbers, things of that nature, they're tightening up. Like I said, one big one went out of business. I'm also seeing jumbo lenders. I'm seeing jumbo programs also restrict their guidelines. But overall, although there's an initial restriction, I don't see restrictions yet with as far as guidelines and underwriting with the traditional USDA, VA, conventional, and FHA. But I'm definitely seeing, some tightening up for sure.
Now, do you think that some of these companies going out of business, like we're seeing right now, are going to actually help smaller lenders like that you work with? That, somebody has to take some of the overflow, right? There's still people out there that are going to buy houses no matter what, no matter what's happening in the housing market. There's still going to be some demand at all times, even when, the situation is not the greatest. So how is it going with your company? Are you guys still staying afloat? What's happening over there?
So, and it really depends, Michael. Like, I don't necessarily see big lenders going out of business as helping small lenders. A lot of small lenders actually use the money from big lenders. I think it really has to do with how strong that company is. I think that you saw a lot of layoffs with like Loan Depot and places like that because those companies are so heavy on marketing, right? So they make a whole bunch of money and they spend millions and millions of dollars in marketing. So their overhead is a lot bigger. So in order to stay in business, they require more closings. But for example, the company I'm working for, AMCAP Home Loans, and I can say this because I was a branch manager over 3 branches. I ran a P&L. Total nightmare, dude. I had to monitor and track every penny that came in and out of my branch. So The thing is with AMCAP, we're lean. You know, we at AMCAP, we constantly have, as branch managers, constant meetings with accountants. So we have due diligence in place to where accountants constantly attack us, right? As branch managers are constantly attacking us, cut this expense, cut that expense. So we're always under attack from the accountants. Dude, I'm like, dude, like, say I did a good job. I just got, I just made the company this much money. But AMCAP Home Loans is not heavy on marketing. AMCAP Home Loans is heavy about being in the street, right? Being in the street, being in front of realtors, educating people, home buyer seminars. So I've seen a drastic decline in business at AMCAP. I think that's you're going to see that everywhere, but I have not seen, I haven't seen any layoffs. I haven't seen any emails warning of this. AMCAP came out very, very well, very, very well. We made a ton of money in 2020, 2021. And essentially we haven't changed a thing. And again, it's because of the operation, right? The financial aspect, how they're spending money. But some of these other, I don't get it, Michael. Some of these other companies, it's the same mistake as what happened last time. They're spending millions and millions and millions of dollars, expecting the housing market to do what to be a normal housing market, normal seasonal, housing market. And I think what's happening is they're getting it so wrong. We're not in a normal housing market, and people are treating it as that, and they're suffering. So to really, really, dude, I think the lenders going out of business is really going to have a lot to do with their ability to adapt to the changes.
Yeah, not only that, but obviously we continue to see mortgage demand drop pretty
Yeah.
much month over month, as the mortgage interest rates rise, as a lot of prices are still pretty high in many areas, and now inflation is basically out of control. It's eating up people's budgets. I think we're going to see more mortgage demand continue to fall, and essentially maybe more of these companies go out of business because they just cannot stay. I mean, how can you stay in business if you're not writing loans? That's basically your business. So
no, yeah, you're 100% right, man. And in a case to point of that is, and you talk about this a lot in your videos. Keep in mind, I'm talking about AMCAP Home Loans. I don't think most lenders are in good shape. I think most lenders are actually I think they're over leveraged, and that's why you're seeing the resurgence of ARMs. That's why you're seeing, the surge of HELOCs, right? That's why you're seeing these. Have you heard of these fake cash offers that people make?
yes, I have.
Isn't that insane? So it's not really, I mean, so there's been, so I'm saying, it's a little bit tighter, but there's also been an influx of exotic financing. And I believe the reason there is that influx of exotic financing is because they're losing money bad. And I think that most lenders, big or small, I think they're going to be facing some really tough months ahead of them.
Are you seeing a lot of people coming in now and getting adjustable rate mortgages and doing HELOC loans and taking that equity? Are you seeing this?
We don't see that a lot, man. One, we're kind of a tight niche, family. We got a few hundred, I think 500, 600, maybe even more employees. But, I'll see emails every once in a while go across to our branch like, hey, what's your preferable HELOC, right? Where do we go for ARMs? But it's rare, man. Most of the products that AMCAP, at least AMCAP Home Loans, are offering is purchase money, VA, conventional, FHA, USDA, the vanilla. And
right.
I don't, yeah, it's because those buyers are going to keep buying traditionally, right? The exotic loans are more for investing or self-employed, foreign nationals. So, I think consumers are going to be hit as well by lenders going out of business. But I honestly, Michael, it's not going to be like 2009. They stopped lending. They essentially stopped lending. They did all of those laws. It took a long time. I don't think we're going to have a financial crisis in lending like we did in 08 and 09 for residential mortgages. Now, maybe for used car loans and credit card companies will have a financial crisis, but I don't see that happening in the lending market like in the past.
Well, I think that's actually good news for a lot of people who are out there on the sidelines right now, waiting, trying to time the market, figuring out when's going to be the best time to get out there and buy. Because one thing that people are concerned about is exactly what you said. Is there going to be a credit tightening, a credit crisis, But here's what I'm wondering, because the Fed is supposed to be selling off mortgage-backed securities. But in fact, they're increasing their balance sheet when it comes to this. And I feel like this is one of the very last pieces of the house of cards that's keeping the market as high as it is. And I want to get your take on, if they actually do what they say they're going to do and they reverse this trend, start selling off mortgage-backed securities, do you think we're going to see lending tighten up then? What do you think would be the landscape out there if they do this?
Yeah, I mean, I absolutely, because that starts in September. I believe the Federal Reserve doubles asset selling to 95 billion, about 95 billion. It happens in September. I mean, I absolutely expect the interest rates to go up. And Michael, what's really important to know in a normal mortgage market, it's not really the rates that are going up and down every day. It's the pricing. We call it in the industry, we call it pricing, which means the cost of the rate. So I could technically right now, I could still get people 3%. I could get people 3%, but it's going to cost them $20,000. Do you see
Right.
what I'm saying? But back in the past, a 3%, when we were at the peak of these low rates, a 3% would pay people money to take. So the 3% are still there. What's changing every day and what really messes us up as lenders is the massive fluctuations on pricing. And pricing is essentially how lenders are paid. It's how they sell interest rates. So when that happens, what the Federal Reserve has been doing, these radical adjustments have been messing us up. They've been messing us up because the movements have been too drastic, and it has not given the pricing market appropriate times to adjust. And what that's doing is it's absolutely killing anyone that's in the process of purchasing a home. So I've seen this happen on a day later, someone's interest rate can be a percentage higher, right? Or the cost is now $7,000 higher.
To
And
keep
what
the same rate.
Yes, and what happens is there's an initial shock to the market. People start freaking out, and then you got big lenders coming in and say, you know what, we're going to offer this rate because no one else can. We're going to get all that money. So the pricing fluctuations, or in the federal funds rate, mortgage-backed security changes, it's really super bad, not only for lenders, but everyone that is currently in the process of purchasing a home. The pricing is and I remember when the Federal Reserve first started increasing rates, people would send me emails from other lenders that could not honor the lock, right? Think about,
Wow.
so someone will lock their rate. Rates go up like sky high, and some lenders are like, sorry, you guys, we cannot afford to give you that rate anymore. Your lock is meaningless, right? So, so that aspect is it's quite bad, and you could probably imagine the drama that creates. A family goes in to purchase a house, they expect their payment to be $2,000, $5,000 out of pocket. Next thing they know, it's $2,400, $15,000 out of pocket. You have 2 days to close. It's horrible, man. It is really horrible. All of this whiplashing is bad.
Well, based on whatever you just said, then I guess it's no surprise that we're seeing all this, hostility in the housing market with things. Nobody knows where anything's headed, right? Everything is kind of up in the air right now, and no wonder demand is dropping, because who wants to go with those kind of games, right? If I wouldn't be doing that, if I was faced with that situation, I would cancel the deal and say, I can't get the financing. Here's my lender saying I can't get the financing. I'm canceling.
So I often tell my customers this, and if you're a realtor that's worked with me, calm down. I'm always come through for your customers, but I tell my customers it's okay to walk away.
Yeah.
Like if you this is the biggest, most important financial transaction of your life. If you feel like you have to walk away, obviously understand your contract, talk to your realtor, walk away. Just walk away. So I'm a big believer in that, man. Is things change, so can your opinion, right, on purchasing.
Yeah, and we're seeing this happen right now. I just did a video on this the other day talking about how many buyers are canceling contracts. That number is up again. Once again, in July, the number is up. I think it was 60,000 some.
63.
63,000.
I just did a video yesterday, bro. Bro, you didn't watch my video, but no, it was 16.1% of homes in July canceled contract. And I was looking at pre-pandemic on what that is. And unfortunately, Redfin, it was a Redfin article. They don't have an interactive map. But it appeared that the normal cancellation rate is anywhere from 12 to 14%. It is historically high. The only time it was higher than 16.1 was during lockdowns at 17.5. So, I mean, me and you know, man, when you lose, 1/5 of the transactions, that's a massive, massive problem. And it's not only a problem for the first time home buyers, it becomes a massive problem for lenders, for realtors, because like, for example, for me, in order for me to properly pre-qualify someone, Michael, the lenders, a good lender, a good loan officer is going to do an overwhelming amount of due diligence, right? As a loan officer, my job is to review income, assets, credit, right? Thoroughly. But I also take an extra step of due diligence, and I run something called automated underwriting. So, a lot of due diligence is done up front, and that costs a lot of money. There's, because of the Dodd-Frank Wall Street Reform Act, lenders now have to count loan officers, and this is crazy, W-2 employees.
What do you mean
right?
they have to count them?
We have to be because we do FHA, mortgages, VA, USDA. I have to be a W-2 employee.
Oh, I see what you're saying. You can't work off of commission.
Right. And you know as well as I, like this business, well, I do walk off of commission, but this business is a commission business. But what I'm saying is because lenders now have to employ loan officers, W-2, that's medical insurance, that's Social Security, taxes, more taxes. It's putting a heavy burden on lenders. It costs probably several hundreds of dollars to pre-qualify someone. So, when that 16% of cancellation comes and we lose business to new builders as well, that hits us heavy, right? Because we put all this time, money, all of the services we do, automated underwriting, loan prospector, desktop underwriter, it all costs money, man, and time. So it's quite frankly, it is devastating. The cancellation rate is devastating, especially for lenders that are front heavy on expenses.
So are you seeing things worse on the real estate side of things right now or on lending? Like, are you having more business when it comes to sales or when it comes to lending? Like, what's kind of like the winner right now for you since you do both?
So the thing is, Michael, it's not a fair question. I decided after last year, about 2021, middle 2021, for the most part, I got out of origination. So, but I still help my friends and family, right? My job right now, and I know I'm super blessed, I've been doing this a long time, is education and empowerment. So I go around and I teach realtors and I teach loan officers, like, hey, here's how things work. Here's how appraisal works. Here's how to fight appraisals, here's how down payment assistance programs, grants, bonds. Here's how loans works, FHA, VA, conventional. And then here's how to be a good loan officer. Here's how to be a good realtor. So I'm not in the streets in that aspect, but I'm around hundreds of agents per week. And I'm constantly asking people, I'm like, raise your hand if you think the house market's crashing. Right. And when I ask that question, Michael, it's crazy. People are like, no. And I say, yeah, but it probably is. And I tell people to be cautious. They freak out. They're like, oh my God, you tell your customers that it could crash? I'm like, yeah, because we freaking owe it to them, dude.
Right.
We're licensed. They trust us. Side with caution. So it allows me to start a conversation with these agents and essentially say, hey guys, and loan officers, but it's more on the agents, side, because a loan officer it's a little bit different in the transaction. But I'm like, you guys got to warn them, and I also say, like, don't be afraid to tell the truth. Like, they want that. Like, you'll get more respect, more customers if you're forthcoming, transparent, and truthful. I mean,
absolutely.
I love it, dude. I'm in a position to do that. I've taken a massive hit at my income of about 60%, right? But I could afford to do it. I've been doing this 20 years. I have no consumer debt. I have some investment. So even though I'm making less money, dude, I really thrive on the empowerment part. I really thrive on it. And I'm a beast, dude. I was number 5 in AMCAP home loans out of probably 400 people. As number 5. I'm constantly cleaning up messes from realtors. I'm constantly talking to listing agents, buyers agents. I'm really good in the street, but I don't believe in it. I can't do it, man. I can't do it. I can't do it.
I understand. I know what that's all about. Being here on YouTube gives us a new opportunity that, wasn't available to us before. Instead of, pounding the pavement in real estate or giving out loans, we can help a lot more people right here on this platform, with our years of experience that, we're in the position where we can help way more people than we ever would have been able to help face to face, one to one. And that's really the beauty of this, for sure.
And you know what's cool, Michael? Being financially able to do that, right? Like I can afford to help empower, because you know you're not going to get paid as much money, right? We get paid a lot of money in sales, but we can afford to do this, man. I don't have a financial interest. I'm not trying to sell my people cups or shirts or a course. I'm not knocking that. Okay, I'm not knocking that. I'm only saying that I feel free, and it's a hell of a feeling, man. I feel completely honored, and I'm sure you do as well. But um, it's really breathtaking to be able to help people to the extent that we are, and not have a financial interest in doing so. Now, here's the thing. I want to talk about the top 5 places to live in Houston. You know what I mean? I want to do those videos, but right now it's just like, dude, like I'm renting and I know how awful it is to rent. I'm throwing away so much money in rent. I hate it, but like I'm walking this out with my subscribers, and I want people to understand that I'm a consumer as well. Right. And that's the approach that I'm really trying to take on my channel through YouTube, is like, you guys, I'm a consumer, I'm renting, I'm frustrated, but here's what my plan is. Right. And,
Absolutely.
and, and I went through the foreclosure process, lost everything, took 13 years to rebound. Right. So, by the way, Michael, like meet Kevin, right? Like all these people, like, dude, I'm telling you, man, I would be past them if I didn't make the mistake in purchase an overvalued property, man. My first house that I flipped, I was 20 years old. I couldn't even drink alcohol legally. I could drink. I would argue I could drink more in high school than as an adult. But bro, I mean, I remember how the feelings and the power of jealousy that I had going through the foreclosure and bankruptcy process, because shortly after I lost everything, deals of the lifetime everywhere, and I couldn't touch it. I was smart enough to see it. I understood it. I was like, oh my gosh, but I was crippled, financially for 12 to 13 years. So it hurt, but the good thing, Michael, I think gives me a special ability to show empathy as a consumer.
Yeah, and I think that's one of the greatest assets you have on your channel, Travis. Like you are, you
Going to,
are walking the walk. You know, you
yeah,
are going through it, like you said, with your subscribers. You're renting right now, waiting for the next best opportunity to buy. You've been through the foreclosure process. You know how much it sucks. Trying to help people avoid that right now is paramount, which you are doing as well. Which is one of the reasons you guys have to go and check out Travis at Real Estate Mindset, because if you guys enjoy my channel, you're going to enjoy his channel as well, because he's out there giving you guys up-to-date information and telling the truth, rather than just, spewing out whatever kind of lies and opinions that people want to say out there. Like, I understand that some people are not with the narrative that the housing market's crashing, and that's okay. I'm all for difference of opinion, but we've been through this before. We've both been in this business since the last crash, and we've seen the signs and what happens, and we're seeing them again, and we're sounding the alarm. That's what we're doing here, and trying to educate everybody on what to expect, what might be coming next, and how you can be in the best position to take advantage of that. And that's what both my channel and Travis's channel is all about.
and Michael, I'm sure you could agree with me on this. It's hard to do that, because
Yeah,
I'm employed by people that the market doing well is in their best interest. I'm
sure.
employed by people that are like, and I'm telling people don't buy right now. I'm employed by people that the only way that they will survive is by people buying houses. So I don't, brother, I don't like saying this, man. I get so much blowback from realtors, from loan officers, and it doesn't make us bad people, right? Like the whole derogatory doom and gloomers and stuff. Dude, we've walked through this. We have a difference of opinion. We're warning people, and it's as simple as that, man. They can choose not to listen, because I didn't listen. I remember in 2008, it was all over the place. Dude, there's all the data, right? But I was like, nah, I'm making money. I'm stuck in the rat race. I'm going to go to work. And man, and I woke up, lost everything essentially, man. The recession hit, like we're talking about. What happened back then? I lost my job. The lending was pretty much dead, and I couldn't pay my mortgage. I was upside down $300,000 in equity, and trapped in my house. So, like I said, foreclosure hit. When they sold the house, they sent me a deficiency notice of about $200,000. They sent that to the IRS. IRS was like, Travis made this much money. You now owe us as the IRS $112,000. That tax lien followed me around for 13 years, exceeding the normal 10-year statute of limitations, because I also went bankrupt because I got into debt trying to stay alive.
Exactly. And this is exactly what we've been talking about here on our channels, trying to help people avoid this exact scenario. So
it hurt.
I'll bet it did. I'll bet it did. Well, I appreciate you sharing that story with everybody, Travis, because it's important for people to realize that.
Yeah. Of course, brother. Of course. Definitely like sharing, it's just really important to understand what happens when you don't plan for things, right? Like we're not talking about buying a steak at the store, right? We're talking about a house that you're supposed to live in for the rest of your life. So it's really important that you're logical. Be logical, especially first-time homebuyers have a bit more trouble with that. You got to be logical. Take my own situation, as an example of what not to do. Now, having said that, Michael, I get a lot of people still on my channel, like, and I think they're investors that hate on me. They're like, oh, this guy lost everything in the last recession. What could he possibly know? But dude, like anyone that hears that, man, I just want to say, don't let people keep you down. Right. Stay empowered, stay driven. These people don't know what we go through. It's harder for us to get back up and to succeed than it is for them. That's my only point there. So, just keep on doing what you're doing. And, if you got struggles, if you got challenges, just keep working through it. Right. Because Michael, here's the thing. My credit score is almost 800. That's for lending, and cars is actually almost 900. I have phenomenal, spectacular credit. I have a rental property and I have a note on another property. Right. So I earned it back, man. And also, Michael, what I'm saying is you don't have to do it the hard way like I did. I mean, it hurt. It hurt more than my finances. It hurt my family, So it was bad, bro. And that's what I believe, that if people purchase right now, they are at risk of going through something similar that I went through. And we don't want that to happen.
Absolutely. I couldn't agree more, Travis. Well, I appreciate you being here today. Thank you so much for your time. I know it's valuable, and we all have lots of videos to make and real estate to sell. So if you guys enjoyed this video, make sure you go and check out Travis over at Real Estate Mindset. You won't be disappointed.
Absolutely bonkers, brother.
Absolutely bonkers.
Love you, dude. Thanks for having me on.
Absolutely. Thank you, Travis.